Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, October 11th, 2010. Well, we have a little bit of an update on Wall Street today. Basically, light volume, which is exactly 100% what we called for last Friday going into Monday. For those of you that are part of the Research Center, you know that. Now, why? What was going on Friday or over the weekend that kept things so light? And the answer to that is this. You have a holiday today for the bond market. The bond market is closed. Banks are closed. Kids are off from school. Those are all reasons why Wall Street traders would trade lightly today or take off totally, especially the kids, folks, than the bond market. Those are really the two big ones in my opinion. Bond market is closed. You know you're not going to get a big move in the market to the downside, especially considering light volume favors the upside. In addition, when kids are off from school, generally the parents, traders who are parents, will be going away for the weekend and possibly staying home with the kids and enjoying one of the last nice weekends before winter in the Northeast starts to really hit. So again, that's what we're seeing today. You can look here on your charts and see clearly the market is just fading slightly to the upside. Volume is unbelievably light. We are on pace to do less than 100 million shares on the SPY, which would put us today at one of the lightest trading days of the year, if not the absolute lightest trading day of the year. In fact, let's go to this chart here and take a look. This is the 2010, all of 2010 right here. What I'm going to do is I'm going to actually put a line right here using a horizontal line, and we're going to find out if, in fact, this is on pace to be the lightest day of the year. All right, let's draw a line. Now, granted, it'll be a little higher by the point where it gets to the end of today, but what we're going to do is zip over. Yeah, look at that, folks. Looks like you're on pace to be right about on par with these few days right at the beginning of the year, at the beginning of the new year when things are so quiet. But it does look like we might have the lightest trading day of the year on tap. And again, always remember, whenever the bond market is closed or the banks are closed, you will almost always have an extremely light volume day. And we're looking at the daily chart here, but I will flip back to the intraday to give you a little analysis. Also, always remember, when the kids are off from school, chances are you will also have a light trading day because the parents who are traders will be with those kids as well, enjoying time. All right, now again, the market today, you can see we opened right on this yellow trend line. And again, folks, trend line analysis is #1 in any trader's book. If you're hardcore, if you think that you're going to be a profitable trader, you're nothing until you learn technical trend line analysis. And technical trend line analysis, honestly, is easy. If you were a kid and you did, connect the dots, that's all it is. It's connect the dots, simply put. Now, again, you have to know which ones are the more important ones, which ones are less, but really that's all I'm doing here. So again, it's the beauty of this, learning this little technique. Take a look. Connect the 21st high, connect it to this high right here on the 30th of September, connect it to the high right here on the 5th of October, connect it again on the 7th. I mean, literally all you need is two time frames. So you connect this one to this and just extend this line out, and literally the market has hovered, hitting it day in, day out, and pulling back. You could have shorted this market 10 times over off of these levels if you had been an executive trader or top-notch trader here. All right, now again, if you just look, hit it and pull back, gapped up, pulled back, came up, kissed it, pulled back, and today, look at today. Today's the first day we actually traded and closed above it. And look, many of you out there that are maybe newbies to the world of trading or the in-the-money stock style of trading, but for those of you that are not newbies, you know that confirmation is something you have to watch. And as you can see, you closed above it, but you never confirmed. The next candle sold off and went below. And the next candle came above again. The next candle came back below. So you never had confirmation above the yellow line. Therefore, this yellow line is still intact in a mega resistance area until you get confirmation above it. And as you can see, you come back below and you sell off, come back, hit it again, pull back, hit it again, pull back, and multiple times over here. The market just cannot get above this yellow line. I mean, we're talking about these precise levels, folks. I mean, I had this line. You guys can go back in the intraday video for those of you that aren't members of the Research Center, although each and every one of you should be. But you can go back literally a week ago, and I'll have this line on the chart. And to look and see how it plays out now, how accurate it is now, and what it means to the market now is amazing. I mean, it truly boggles my mind, folks. It is a very, very impressive thing. Even for someone like me who believes in it, it still blows me away. Bottom line is this, folks. Let's go over what the market's doing. The Dow is up 18 points. NASDAQ is up 10 points. S&P 500 is up 2.5. You're basically up 0.2% on the Dow and the S&P and about 0.4% on the NASDAQ. NASDAQ is stronger, being led by the three of the four big players here: Apple Computer, Apple Computer is beautifully at the highs of the day, up $3, nearing the $300 level. You got to figure it probably hits 300 in the next few days. That's my at least guess on the matter. In addition, Google is also having a fantastic move today. Google off the highs of the day, but still up $5. And again, of course, Baidu, BIDU, the Chinese play here, up $2.20, back above 100. The one big large cap mover or market mover that is not participating today is Amazon. Amazon is down $1.33, coming back in. All right, so again, most of large cap tech, NASDAQ 100 is to the upside except for Amazon. If we look at a couple other areas, you can see JP Morgan, which is a market leader here, is up on the day, up 43 cents. However, Goldman Sachs is down on the day, 60 cents. So a little bit of a miscommunication. Not all the financials are in line today. You have a little bit of a disparity. In addition, folks, take a look here. Another disparity showing itself. ExxonMobil is up today, up about 25 cents, but Chevron CVX is down 22 cents. So again, you can see for the majority of the large cap leaders, they are up. They are up. But there are little pockets. You got your Amazon, you got your Chevron, you got your Goldman. Those are market leaders that are not showing the resilience of the up move in the market. And again, one thing to recognize here, very interestingly, is the dollar is actually positive. You can see I was analyzing it before, putting in a little bit of resistance level, which worked beautifully right here. Again, you can see right from this pivot point, you cross it, go right above, and come back in. Then you hit it again and come back in. But the point is, again, the dollar is trading to the upside today. Now, this is the fantastic little synopsis that I want to give you guys to make you think. I mean, that's the goal here, is not only give you guys ideas and plays and stuff, but I want you guys to really be thinking about the markets and understanding and delving. Think outside of the box, in other words. Now, the key is this. All right, if you think about what's going on today, we knew was going to be a light volume day. Chances are neutral to upside. Even if the dollar was to go up today, which it did go up, you had to figure that because the volume is so ridiculously light, meaning we're on pace to be the lightest trading day of the year, you have to say to yourself the market probably will not sell on that move up. So therefore, it behooves the Federal Reserve to not prop the dollar down or push the dollar down to lift the markets, because they don't have to today. Today's one of those light days where it doesn't matter. The dollar could be up decently, even more than it is, and the markets would not be responding to the downside because there's no selling volume in there. So again, very smart to notice this here, folks. The dollar is up today. Markets are basically flat to higher as well because there's just no volume behind it. Now, going into tomorrow, going into Wednesday, especially on Wednesday, tomorrow you have the beige book, I believe, at 2 o'clock, and then after hours, you have Intel's earnings after the bell. Starting on Wednesday, you should have a lot of volume, and really even tomorrow after 2 o'clock, you might have a good amount of volume in the market. So be aware that those factors, that's when the Federal Reserve has to come in and influence the dollar. They have to push the dollar down to keep the markets propped up. Today, they can go on vacation just like everyone else and not really pay much attention. In fact, they even might want to get the dollar up so that when they drop the dollar back down, the markets go up even more. I mean, it's really a tremendous little smart action by them to keep the markets here. And you can see the markets not exactly running up by any stretch, but we're up 25 cents on the SPY. I just gave you guys what the indexes were doing as well. But the dollar being up today, if this was a better volume day, you would see this market down. But because of the light volume, it's working beautifully in the favor. And then just think about this. Maybe tomorrow or on Wednesday, if the Fed drops the dollar back down just to where it was on Friday, the markets can go even higher now because they've built in that little bit of a window. So again, you have the markets up near the highs. The dollar is up today. If they drop the dollar back down, UUP again is up a little bit. If they drop it back down right to here, which is where we closed on Friday, this much, you got to think that that could be enough to lift the markets to even a new high. Possible resistance area now is, to me, 117.50 on the SPY. That would be your next spot of interest, in my book anyways, in this market. Again, everything's all about the dollar once we get the volume back in after this holiday session today. Keep a close eye on it. Now, there are some stocks moving today. We've had some good calls in the intraday stock chat. I gave out this stock right here, Zoom. These are Chinese stocks, folks. Chinese stocks are hot as can be. I gave Zoom to the intraday stock chat earlier today before we closed, and this is up 22 cents or 5%. I gave SKBI in the research center. This is already starting to take off to the upside beautifully, and these are all Chinese stocks, low PEs. They are all running like crazy. All right, NIV I gave as well at $2.10. It's now $2.18 popping. And again, all these Chinese stocks, especially the ones that make money, are hot, hot, hot right now. The key hidden gem, which again is having a beautiful day. Look at this hidden gem, guys. Again, highlighting it over in this area, and look at the move up it's had. Basically up 20% now per the alert about a month ago or so. And again, it should have a target upwards of minimum resistance. It's going to be a break right up here, and then you're looking at the 200 around 340 on the upside. So great moves there, folks. Again, the small cap China plays are hot as can be, and we should all be looking at them or wherever the market has the ability to make us money. Find that level, go in for it. And again, Research Center gives you these plays, as well as the intraday stock chat, wherever you want to be. Intraday stock chat is, again, more of the intraday style, but it nonetheless is discussed via swing trades as well. All right, folks, that's all for today. Enjoy the light volume. We will be back shortly, and take care.